Last week, sterling came out marginally ahead against its peers, with the euro taking second place, and the dollar seeing impact from the latest inflation figures. We did see small clips of volatility, as the week continued and further data was released, but overall, the main pairs were confined to tight ranges. The main headline from last week was the US CPI inflation data, which printed at 3.4%, versus the 3.2% forecast. Despite the higher print, the US saw a softening in US rate expectations by a further 30 bps. This took the total expected cuts this year to 165 bps. Pound sterling to US dollar is up by 0.5% since last week, and euro to US dollar has increased by 0.4%. Not the largest of gains, but the most notable of those during last week's trading. Pound sterling to euro remains in the pound's favor since the turn of the new year, but has taken a knock from its highs last week, allowing some breathing room for euro sellers. It is safe to say that the market's focus for 2024 will be the rate cut expectations and announcements from across the board. The market will be driven by which central bank acts first and which is boldest in its policy decision-making. For the week ahead, we have a busy UK macro data calendar with average earnings for November and CPI inflation data for December. Both are expected to show a drop-off. Retail sales and industrial production releases are due for the US this week, and the Eurozone's main release will be the December ECB meeting minutes.